Hey everyone, today's episode is all about how to pay yourself as an LLC. My name is Sherman and I am a licensed CPA here at Life Accounting. Not only do I help people pay themselves correctly as an LLC, but I've also started one of the fastest growing LLCs according to Inc. magazine and the Financial Times in 2021. So today I want to walk you through how I pay myself as an LLC owner and how I advise my clients to pay themselves through an LLC as well. All right, so you're living the dream. You work for yourself, your business is earning money, and now it's time to make some decisions. How much should you pay yourself? If you pay yourself too much, you might risk putting your business in a very bad financial situation. And if you pay yourself too little, then you might be overwhelmed by all the taxes you owe as an LLC. And speaking of taxes, a lot of people want to know, how exactly does that work when you pay yourself? Should it be deducted from your paycheck, paid quarterly, or at tax time, or what? If this is you, then stick around until the end of this episode because I am going to cover everything you need to know about both the financial aspects of paying yourself and the tax side of paying yourself as an LLC. By the way, if you don't want to miss another video that can help you save on taxes and boost profits in your business, be sure to subscribe to our channel. All right, let's begin. How should you pay yourself as an LLC? You have probably heard of several ways of paying yourself from your business, like dividends, distributions, draws, W-2 wages, and so much more. But as an LLC, the best way to pay yourself is through an owner's distribution, which is also referred to as an owner's draw. Think of an owner's distribution as a transfer of money. You are simply transferring money from your business to your personal bank account. You can literally write yourself a check, go to the bank, or simply wire funds from your business bank account directly to your personal bank account to pay yourself. When you do this, you don't need to worry about setting up payroll accounts, withholding taxes, or anything like that unless you are electing to be taxed as an S corporation. As the owner of an LLC, you are a shareholder, not an employee. Because of this, you do not have to pay yourself W-2 wages. Only employees are paid wages. When you are an employee, taxes are automatically deducted from your paychecks before it hits your bank account. But when you own an LLC, your taxes are not automatically deducted from your distributions. In fact, your LLC taxes have absolutely nothing to do with how much you pay yourself from your business. LLCs are taxed based on the business's taxable income. This is simply revenue minus expenses, or in other words, the money the business earns minus the expenses it incurs. As the owner of an LLC, your taxable income is based on what you own. If you own 100% of the LLC, then 100% of the business income would be reflected as your individual income when you file your taxes. Because you own the company, none of the distributions you pay yourself are tax deductible. You see, technically, LLCs are what is referred to as pass-through entities. This means that the business's taxable income is allocated directly to the owners to pay on their individual tax return. Basically, in the eyes of the IRS, the business's income is your income. For example, if your business earns $100,000 in taxable income, but you only pay yourself $10,000, you're still going to pay taxes on the full $100,000 that the business earned. And I can't tell you the number of times that I've had people tell me that their tax bill was wrong because they only paid themselves X or Y from their business. Look, the IRS does not care how much money you pay yourself from your LLC. That's your business, literally. The IRS is looking at the income your business reports, and you report that income like it's your own when tax time comes around. Generally speaking, you will be paying federal income taxes, state income taxes, and self-employment taxes on the amount you report. However, if you elect S Corp status, you can potentially limit the amount of self-employment taxes you pay. But we have some other videos on our channel on how to do this, so be sure to subscribe and check out our page if you're interested in this. All right, so we've discussed how to pay yourself as an LLC and how you're taxed as an LLC. Now let's answer the next big question, which is how much should you pay yourself from your LLC? Because you're taxed on all of your business income, you might think that it's your best bet to go ahead and pay yourself 100% of your business income since you'll be taxed on it anyway. But it's not so simple. You have to think about what your business needs, and you should also plan to pay your estimated taxes. So let's talk about it. First and foremost, let's be clear. Cash is the lifeline of your business. It's the blood and the heartbeat of your business. And if you starve yourself of it, then your business will not survive. This is literally a fact. 90% of businesses fail because they run out of cash. So think of cash like fuel. The less cash your business has in the tank, the shorter the distance it can go. And too many times we see businesses take so much cash out of their business that they don't even leave enough to pay their expenses. Like seriously, I've seen businesses pay themselves a ton of money and not even have enough left to pay their employees. That aside though, you're also draining your business potential when you take too much cash out of your business. Some of the fastest growing companies grew quickly because they consistently reinvested that capital back into their business. For example, a lot of people don't know this, but Amazon, which is basically the largest business in the world, was technically unprofitable for the first 14 years of their business existence. And it wasn't due to things like poor budgeting or expense management. They were consciously reinvesting into their business. And as a result, they grew exponentially faster than anyone could have imagined. They revolutionized their industry and are now one of the largest companies in the world. Jeff Bezos could have easily been greedy in his early years, but he wasn't. And now greedy people envy his success. Anyway, my point here is before you consider taking a dime out of your business, you need to make sure that your expenses will be covered and that you're not starving yourself of your strategic goals that require money to grow your business. With that said, here are the steps that I take when paying myself from my own LLC and exactly what I would recommend to any other LLC. Number one, you should have at least 3 months of operating expenses in cash. This will provide you the security and peace of mind that your business can stomach any unexpected losses and stay afloat. So for example, if you lose your biggest customers or the economy crashes, you can weather that storm with this reserve. Number two, you should set money aside to reach your strategic business goals, whether that's more marketing, new products, buying new technology, or simply investing into your existing products and services to increase your customer satisfaction. Whatever it is, set the dollar amount that you're willing to invest and leave that cash in your business. And then number three, you should set money aside to pay your estimated taxes. You should pay at least 90% of what you estimate you will owe in the current tax year on a quarterly basis, or 100% of the prior year's tax liability. And then finally, you can pay yourself all that is left in your business as a distribution. Any excess cash can be divided amongst yourself and your partners according to your respective equity in the business. So folks, as an LLC business owner, this is exactly how you can pay yourself in your business as well as the tax consequences to follow. If you enjoyed this video, please let me know by clicking the like button below, and be sure to subscribe to our channel if you want more videos like this to help you manage your business and save on taxes. My name is Sherman, and I'll see you in the next episode. Talk to you soon.